Let me tell you something your bank statement won't. This October, a silent financial event is unfolding, one that most news channels are completely missing, and it has the direct potential to shrink the number in your savings account without you ever making a single purchase. This isn't about a stock market crash you can see coming on a chart. Hey, this is about a fundamental rewiring of the cost of money itself, a shift so profound that it will quietly transfer wealth from the unprepared to the prepared. What I'm about to share with you isn't just more scary news. This is your actionable survival blueprint. I translate the banker's shocking admissions into 3 critical steps you must take before October to secure your finances and potentially profit from the shift. Now, you might be asking, what is this secret call? It wasn't a single clandestine phone conversation, but rather a series of deliberate, high-level communications from central banks to the world's largest commercial banks, the kind of dialogue that happens behind closed doors, far from the public's ear. The language used wasn't of panic, but of absolute certainty. It was a coordinated message preparing them for a new, permanent phase of monetary policy. The old era of cheap, nearly free money is not coming back. The emergency level interest rates we got used to for over a decade were exactly that, an emergency measure. And that emergency is now officially over. The new phase is one of structurally higher interest rates, and this is the single most important piece of information for your personal finances right now. Think of the economy like a massive ship. For years, it was powered by the jet fuel of 0% interest. That fuel is now being systematically replaced with a different, more expensive grade. The captains of the ship, the big banks, have been told to adjust their engines. They've been given the map. The public, however, is still largely in their cabins, unaware that the very nature of the voyage has changed. This is your invitation to the bridge. This is about understanding that the rules of the game have been permanently altered. The implications are staggering, and they touch every single part of your financial life. Your mortgage, your car loan, your credit card debt, the interest you earn on your savings, the value of your investments. Every single one of these is about to be recalibrated by this new reality. The transmission mechanism from that secret call to your wallet is direct and unforgiving. When the central bank signals higher for longer, commercial banks immediately start repricing every single financial product they offer. The low introductory rates on credit cards, gone. The manageable payments on that new auto loan you were considering, significantly higher. The opportunity to refinance your home at a rock-bottom rate. That door is slamming shut if it hasn't already. This is the first domino to fall, and most people won't hear it until all the other dominoes are already in motion. They'll feel it when their monthly budget gets tighter for no apparent reason, when the minimum payment on their credit card suddenly isn't making a dent in the principal, when they realize the dream of upgrading to a new home has been priced out of their reach. This isn't a prediction, this is a process that is already in motion, and its full force will be felt as we move into the final quarter of the year. The system is preparing itself, and this is your final, clearest warning to prepare yourself. The survival guide starts with understanding the battlefield, and the battlefield is this new paradigm where the cost of borrowing money is no longer a trivial concern but a central, decisive factor in building or preserving wealth. The first of the 3 steps I will give you is the most critical, the foundational move that everything else depends on. It is the non-negotiable starting point that most people will ignore until it is too late. So, if the first domino has been pushed and this new era of expensive money is already locked in, what is the single most powerful move you can make right now? It's not a complex stock trade or a speculative crypto bet. It is a fundamental shift in your mindset from being a borrower to becoming a lender. For the last decade, the winning strategy was to be in debt, cheap debt. You were rewarded for taking out a massive mortgage, for financing a car, for leveraging every possible dollar because the cost of that debt was negligible and the assets you bought with it were inflating. That game is over. The rules have been brutally inverted. The system is now primed to punish borrowers and reward savers. This is the core admission from that secret call. The entire financial architecture is being recalibrated to make debt the enemy of wealth building. Therefore, step 1 of your survival guide is this: you must launch an immediate and ruthless debt liquidation campaign. This is not about making casual extra payments when you feel like it. This is about treating your high-interest debt with the same urgency and focus as you would a medical emergency. It is a financial tumor that is now growing at an accelerated rate, and it must be cut out. Every single dollar of credit card debt, Every personal loan, every line of credit that is not tied to an appreciating asset is now actively working against you, eroding your financial foundation faster than you can possibly build it. The mathematics are now your enemy. The interest rates on these instruments are designed to compound against you, trapping you in a cycle of minimum payments that never touch the principal. Your first action after this video is to list every single debt you have, from the smallest store card to the largest personal loan, and organize them not by the total amount, but by their interest rate. You will attack the debt with the highest interest rate first, with every spare rupee you can muster, while maintaining minimum payments on the others. This is the avalanche method, and in a rising rate environment, it is the only logical approach. You are strategically eliminating your most expensive financial liabilities first. This requires brutal honesty and significant short-term sacrifice. It means postponing that vacation, canceling unnecessary subscriptions, cooking at home more often, and selling items you no longer need. Every freed-up rupee is a soldier in your war against debt. The goal is to create a debt-free fortress for yourself, a financial position where the rising external interest rates cannot touch you, where you are immune to the tightening squeeze that will cripple so many others. This is not a step towards profit. This is a step towards survival and security. It is the non-negotiable foundation, because without it, any attempt you make to grow your wealth in this new climate will be like trying to fill a bathtub with the drain wide open. You are simply pouring your hard-earned money into a hole that the bank owns. Once you stop the bleeding, once you have built that fortress of zero high-interest debt, you are then ready for step 2, which is where we flip the script entirely and move from playing defense to going on the offensive. This is where we learn how to make this new high-rate environment work for us, to become the lender, to become the bank, and to finally start getting paid for the money we already have. And this is where your financial picture transforms from one of survival to one of empowerment. Because once you have fortified your position by eliminating the drag of high-interest debt, you step into the most powerful role in this new financial system. You become the lender. You are no longer the customer of the bank. You are now its competitor. Step 2 of your survival guide is to aggressively reallocate your cash into high-yield instruments that are now, for the first time in over a decade, paying real, meaningful returns. This is the flip side of the painful coin we discussed, and it is the opportunity hidden within the crisis. While banks will be quick to raise the rates they charge you on loans, they will be notoriously slow to raise the rates they pay you on deposits. Your mission is to reject their paltry savings account offers and move your emergency fund and your short-term cash into vehicles that reflect the new reality. We are talking about government securities, high-yield debt mutual funds, and fixed deposits from institutions that are aggressively competing for capital. This is not about speculative risk. This is about capitalizing on the guaranteed, higher-risk, free rate that now underpins the entire economy. Your money, which was once sitting idle and losing value to inflation, can now start working for you as a genuine income-producing asset. Think of it as planting a tree that finally starts bearing fruit after a long drought. Every month, that interest income will flow into your account, compounding and growing, simply because you had the foresight to move your money out of a stagnant pool and into a flowing river. This is the strategic shift from being a passive saver to an active capital allocator. But this journey doesn't end with just defending your wealth and earning a respectable return on your cash. The ultimate step, step 3, is about positioning a portion of your portfolio to not just survive the transition, but to actively profit from the new economic landscape that this shift is creating. This requires a more nuanced understanding of which sectors and companies actually thrive in an environment of higher capital costs. The low-rate era created zombies, companies that were only alive because they could constantly refinance their debts for next to nothing. That life support is being unplugged. This is a moment of Darwinian cleansing in the markets, and your investment capital must flow away from the weak and towards the strong. You want to be invested in businesses with fortress balance sheets, little to no debt, massive cash flows and pricing power, the ability to raise their prices without hurting demand. These are the champions that will not only withstand the pressure, but will actually gain market share as their weaker competitors falter. They are the ones who can fund their own growth without begging for expensive loans, and they are the ones that will be seen as safe havens when volatility strikes. This 3-step process, liquidate debt, lend strategically, and invest in quality, is your integrated survival and growth blueprint. It is a complete system that first protects you, then pays you, and finally positions you for superior growth. This is the exact conversation the big players have already had. This is the clarity they are operating with. Now you have it too. You are no longer in the dark. You have the map. But a map is useless if you don't take the first step. This is not just information. This is a call to action. Your financial security in the months and years to come depends entirely on the decisions you make in the next few days. This is your moment. Do not let it pass.